All right, everybody, Stingham here. Going to do a monthly recap for the month of January. Pretty much the market did exactly what we thought it was going to do. Everything, if you set up correctly, you was able to follow day by day, market by market. So it all starts with the setup. That's what I've always said. Process starts with the setup. But we wanted to go over the monthly recap, try to do any questions that you have, and be able to try to answer those. Um, so with that said, John, take it away, and we'll start from there.
All right. Welcome everybody. All right. For as long as I've been saying we're in this kind of breakout mode that kind of be kind of began around November. I want to say. So here goes the monthly of of this the monthly recap, which literally is from December into January right here. This is our move right here. Right. We've been moving up since December. I mean, since the beginning of the end of December, where they usually do the Santa rally, and then we took off. But realistically, we kept taking off. We took out these highs. The reason this time is more significant than any other time, and it shows on our chart, is that we actually broke a trend to the upside. Every other time that we came down and made a 50% bounce, we actually failed it. Came up, bounced 50%, failed it. Came down, bounced 50%, and this time we did not fail it. So if you take a look at this area right here, we started home 50% around the beginning of January. So this is their so-called Santa rally running into January, showing almost a break to the high side. Now my expectations of this is literally that we're setting up for a head and shoulders kind of ordeal, where we're going to make a higher high, right? And as earnings keeps on coming in bad and interest rates starts affecting companies, we'll probably have a big drop into October. We did say that at the end of the 30th, they will start selling, um, and they haven't done it. And I don't think they are going to do it. I think they're literally going to make a move to take out these highs right here. Um, and the reason for that is because of this, you know, high, low, right? We swept this low, had a high. We swept the low side, right? And then we came back up and held half back right here. We're more likely coming up to this area. I don't know how high we're gonna go, and when they're gonna start selling is probably into March. When the contract flips over in March, we'll probably see a sell off. Not a sell off, but a return back to this area right here. It's actually on a smaller time frame. We can see it better over here. It'll be returned back to the neckline, and then we'll have a move back up to make another shoulder, and then you'll see it. But on the daily, you can probably see it better. But this will be the monthly thing that we're moving up. We only have one red week, and when we started the week off red this time, I want you to pay attention to that candle right there. This candle right here. See how we went a half back? What else did we did? We swept the low. Um, right here, maybe if I could take this high, right, and take that high, right, and it kind of correlates with a 50% right here to the high side. So we're expecting, because of that report, we're expecting a pullback to the lows, uh, which is kind of where London's open and closes at, where they weren't able to make a move into that Fed meeting because it was after their close. So they kind of want the same price as what they got before. So we're thinking a sweep of the low just like this, and then maybe carry on. That's why we're more of a downside error right now that we're thinking about it. But as people have good news, all they're doing is buying it, and that makes it more interesting because it could go faster and it could go a little bit lower. Um, but more likely it's going to come down here and then pop up because once they get a lot of people short, it's probably gonna ramp up, and we still haven't had that real blow off top that we should have had. Um, and it's possible that we're going to do it before March, and February is a short month, so it's moving very fast and really just moving in the direction that we think it will move in. But like I said, we set up correctly, you're gonna see what they're doing. So let's drop down this.
Let's hang on before you change it. The short side, as you notice the wicks right here, this short move is this long. This short move is shorter.
Man,
This one's probably gonna be real short.
man.
So we got 1, 2, 3. What happens after 3? We expect a big boom. So
Yeah, they could literally move back up really, really hard. We do expect them to sweep up here since we're above 50%. Because not because it's just literally what the chart is saying. They just keep buying.
yeah,
They keep buying. The weeklies just get boarding up right here. So it has a lot of momentum to keep going up. And the more
they're buying the halfbacks. I mean, that's what I marked here. That's a low. That's a high. This is a halfback. They bought it. This is a high.
right here,
This is a low. This is a halfback. They bought it. So
and the stuff that we teach on it, like I think the stuff on the recap video for the week, this is why we knew that we were going to pull back very hard this week, at least to 50%. This didn't sweep, and this is kind of where they changed the market up on the daily. I have this mark. This is where they held 50% of this candle, and we literally did 100% move up. So that 4190 is not that far from. So I could see them come down and then pop up, and then once we pop that 4190, we could explode to the top side.
So what did they disguise? They disguised the gap right here. Right here's the gap. What did they do? They held the gap right here.
Yeah.
It's a nice disguise.
So this is kind of like last night's move. If we would have gone above the gap and then done this kind of move and then came back up, we were good. Last night we didn't do any of this. We literally went into the gap and just kept selling off. So you gotta be mindful. It's kind of this kind of scenario right here. But we didn't even close the gap last night, and that's another thing that's scary. That we didn't go see the low that candle that closed on.
Right, and that was the clue that I mentioned last night. When it was a 10-point gap or more, you got to go with gap. There's a good chance that gap's not going to close by clock. And what do I mean by clock? I'm talking clock by midnight, because Asia is our play from Globex Open to midnight. That's the play. That's the clock. So they didn't close the gap by midnight. It ain't closing. So
if you set up, you see it. Like
you'll see why midnight sold it.
Yeah, you see it. And it did close another gap that was down there that we were looking for to be closed earlier in last week, which was 29.50. And I think I said we're gonna go down 29.50, and then we're probably gonna bounce from there. And midnight was selling off again. And it did just that. Because of the price and time. So it's always time and clock. Like all that's important. When London opened, we were right at that gap as well, 29.50. And it was sold right through it. Which means that we were still New York. London is literally selling. They're open, trying to get back to where the Fed, where they left them before the Fed meeting, before the Fed announcement that New York just took off. The fact that we're below the weekly right here and below this week, if you see, look, anytime we start the week low, where we go sweep the low and continue down. This is going to be a different era because of this halfback that we held. And the fact that here we're starting to hold halfback. So even up here, it's kind of dangerous that we are holding this halfback. But the fact that we have London's close down here at the lows, I think we're going to come back to London's close and then pop back up.
Yeah, I think they're going to squeeze this a little more, get our little fish head, try to get it real tight into here, and then make the.
Yeah. And they could do that into inflation report for next week. We have nothing this week. There's absolutely nothing in the calendar this week. And if you see this, look, as soon as we started a red week, even on the way up, what we do, we swept the low. So we could anticipate that right here. That every candle that started off, a week that started off red, we kind of pull back to the lows. Like, unless you were all the way down at these lows down here, those were the only days. Now, we could possibly have a blow top here, like we just continue to go, but that's why we set up, because it's going to show us if we're in the right direction or wrong.
Yep, the range block will put you in the right direction.
Yeah, and we can't be biased. So that's another thing that we want to touch up on, because a lot of people just I guess a lot of people have been, you know, not that they haven't been setting up, but everybody sets up has been setting up good in the homework tab. The thing with that is that say that we're in a box. You don't need to do all the boxes. You need to do like we're if we're obviously below London's close, we want to go with the down boxes until we get to the higher boxes. So if price is there, you can move the box to where it's trading at. So that way you can see the high, low, and halfback. So let's do a quick setup um, for newcomers or for everybody else that hasn't done it. I
That's
think
fine.
that
Just
kind of
go ahead and set up for tonight, and that way we know.
yeah. So let's just it's really a tight
Yes,
range.
yes,
That's
yes.
another thing that is really tight. But I want to set up from this Thursday area because I told him I said, oh, we're still kind of
Okay, that's fine.
in the
I'm
same
good with it.
scenario coming down. And then we'll see how it looks because it's very important what it did here and it shot up. The fact that we shot up here and this is literally a halfback that was rejected, kind of insinuating that we're still in a downward trend or in a short term downward trend, trying to get back to this area right here where London's open, London's closed. So let's set up from this area and then we'll see how that looks, and then you could see how the possibility of us getting back down there is still there. Now I'm not saying just sell it. We're gonna play for what it's doing at the time. We're doing one. Let's do this on. Actually, I have the other one set up. Let me go to the other one. Sorry, it's just a lot easier.
I'm looking at all these candles over here, man. Every candle's got wicks on both sides. You talking about wicked? That's just wicked.
This is all the work that this was a gap right here that it kind of hit, and this is why I say I hate gaps. I'm gonna remove a lot of stuff. Now let me go back to the other one. But actually, let's just look at this arrow right here. Let's look at these.
Hey, I tell you a little trick, John. Just put H23 on the back end of that MES up there, and that'll change your chart to the H23.
Yeah, but then
It ain't gonna show up on the H23.
what I'm saying is still gonna show it. Like the setup is gonna be it's gonna go, but all my markings are gonna go.
You're right. I'm trying to get all your markings out. Yeah.
Yeah. Let me just do it like this. And it's not gonna be perfect on this chart. Oh, it should be. What I'm gonna do is this is what I do. I set up literally the first box, right? And the end time for me is Eastern, so it's 1500, and then the high of was 1400, which is within the arrow of 1130, right? And then all you gotta do is really like what I like to do is just take the fibs and just put them right on top. That way I'll get at least the next boxes for it. So I'm gonna extend these out, and then we're gonna put the boxes where they lay at right here. I'm gonna leave this price here because that's what that was a different price. Let me just get rid of it.
Gotta quit beating that dog, man.
He's a whiner. I don't know why we have him. But if you take if you duplicate these boxes as price trades in them, you will start to see what's happening in it. So right here where price traded, and then you could duplicate this box again, and then put it down here where price traded, and they start seeing it as it goes, and duplicate this box again. And you see how we hit the low down here? Really, we've been trading in this range right here.
So we sell high, sell high, sell high. We don't buy the highs. When we talk about sell the highs, this is what we're talking about. The buy would be here. The buy would be here.
And if you
the buy would be here.
So what we teach is the relationship with time. So when we're at these lows, look at the time here, 5. This is the dip down. This is where I made a mistake. And this is a report. So if you take out this report and go right here, it literally did the same thing. But look, it went all the way down to lows. but we couldn't get above the highs. So you know there's something wrong with that. The fact that we couldn't hold midnight right here, look where we went, right back to this low. And then look, we can't get above the high over here. And what we do, we went a half back, tried to hold it, and then we failed it. And then when we end up going to a low. So this pullback was, and it's kind of our fault that we didn't do a recap, but this is literally like how they were selling it off. And I think we said last week that they're going to sell us off because of the fact that London's open and close were down there at the same price. They want to get back to that price. Do they have to get to that price? Absolutely not. Can they turn it around and go and take out the highs? Yes, they can. But I think I don't think this month they're going to sell it. Maybe we could get a move up from 24.54, how Dobbs teaches it, 24.54 and then 54.96, which will literally.
Yeah, 55, 24, 55, 96.
Oh, 55, 96.
Yeah, it's 55, 24, 55, and 96.
Because it always traded in those numbers. So the fact that we're down here, we're holding 24, we could literally go up to 55. And then once we get up here, because you got to understand, they're dragging this out so they don't sell it into it. Because at the end of the month, you got all these options. And February being a small month, I think they're just gonna hold price up here. So when price is close to these options, they're actually what, more expensive or less expensive? How's it go? It's not profitable actually. So they could literally hold up here and then sell it one day and bring it back up really quick, which I anticipate them to do that.
I think they get cheaper as the time decay goes down. They're expensive when you got lots of time. They're expensive. As time goes closer to the expiration, they get cheaper.
Yeah, in the scenario, if you go on the yearly, let's do the weekly. If you go on the weekly again, right? Let's do this weekly again. And this is kind of something that it becomes common for them to do this. And look, ever since the 30th, there's the weekly, right? On the 30th, they start selling. And I think this passed the 30th over here, but we kept going because this was the break of the market downward to the downward side. And then look, the 30th up here and they sold. And then after the 30th down here, they started buying into the first. So after that era, they bought it. And then I think right here, we're going into the 30th. They pulled back a little bit and then took it off. But literally like into the 30th, and we're at the highs, they're kind of selling. 30th right here in the highs, they sold it. When we're at the lows, they're buying it. So this is 30th, they're buying. So a scenario that we're at the 30th and we're breaking the trend, I think they're going to run it up again and then sell it into the 30th, make it come back here to this area that's going to end up being the neckline for this. On the weekly, it doesn't look like that, but if you put it on the daily, you possibly see that they're probably setting up something like this. This is literally where we're possibly going. But if you really take this candle right here, and I think this is when the market broke to the top side. I don't know why this price looks different on ES and all the other ones. So if I go on ES, it's a different price. It's near the same one. I think it's 91 on MES, and it's this price on this one. Let me adjust it. Maybe I got this a little bit off. I'm gonna put it here. No, I see it's a little bit off. I think we're gonna set up to start going like that to this price, and that's really a price right there. But I think like we had this we had these prices right here. We literally had this price that we were gonna come down to this low right here for the week, and we also had a 4 hour. But the fact that market is down there still is the 4 hour. These are the prices we knew that.
So what is this line? Tell them what this line is. What's your marker?
Oh, that's the daily halfback. That's a daily halfback, and this will be the 4 hour down here about. So, and look at the move we made all the way down. So we hit all the levels down, but I think reality we're gonna come down here to London's closed, London's open. And the reason that is that London keeps selling it, London keeps selling it, London keeps selling it. Can we pop back up? Yes, but the fact that we didn't close this gap, it's kind of got me thinking that we're gonna go see a gap, and that gap might hold us down. Now we get above that gap, it's possible that we come up here. But I think people are gonna get more short if we come up here, reject it, and then come down here. Because I think they need more orders to send it back up. Remember, like some of the biggest companies in the market reported bad earnings, but they don't care. They don't. We don't care about price. We just care what it's doing. We don't care about news or that kind of stuff. But the fact that they're on TV saying that, oh, it's a buy, the bottom's in, the bottom's in, the greed is going to get there. And as greed gets very high, it'll get outrageous. And you see it today, like pricing, it just wasn't, in New York, price was just acting completely irrational to a certain point. But, you know, everybody's buying the dip on this. So if everybody's buying the dip on this, more likely they're going to sell it because there's too many people trying to buy it. Because then you got to think that options are probably heavy for the week into Friday. And possibly we go up to this gap. We could go up to this gap because we held half back, right? So we go see the high, we reject that gap, and then we come down. You know, if everybody's buying to go higher, right, the market's probably going to go in the opposite direction. Now, that's not a decision for me to make. If this thing goes above this high and we're ramping up to here, we're going with that play. You know, and that's why we say setup, because the setup will keep you in line with what it's doing. But, you know, like everybody's buying, so more likely the market is going to sell. Just like when they say, oh, it's a sell, and these reports come out, they're actually bad reports, and the market goes up. It's because they don't want to sell now. It's until they sell. And then once they convince people to buy, that's when they're going to sell. The same thing on the other side. Once they convince people to sell, they're actually buying into them. So, and that's why this move made so much sense to go up. And everybody was like, oh, yeah, we're going 200 and everything. Yeah, I think it's going to take out these highs. And look, I mean, every high that we had is kind of being challenged right now in the year. See, like those highs right here. I think we're going to go blow off these highs like completely. And I think we'll possibly go up here. And it's not going to be something you can actually trade. It's going to be hard to trade because they're going to shoot it up like a rocket. And you kind of saw a scenario in the Fed meeting, so they're kind of setting up for that shoot up like a rocket. But into March, then we'll see the move down. But I think it's going to trade normally in the range we've been trading. Today we didn't even do. We did 39 points out of 67 points that we usually do. So it's going to ramp up, but I think
it definitely left some range for Asia tonight. So
and the fact that we didn't shoot up, they didn't get the range up. So if you literally do the range, like from some days, even when it's supposed to come down, they shoot it up and we still get the range. We didn't get any range today, so it's kind of odd. We could go all the way up to that gap, you know, reject that gap and that sell off. But remember, it hasn't been moving normal in New York. So there's a lot of options that are affecting it. And during Asia and London, it's been doing times. And if you just stick with one play, I think some people are like, I'm just going to stick to 5 a.m. It's solid. 5 a.m. is solid. Like that's really where like 5 a.m. like the trade from there is really where I trade. And going into New York, I'm more cautious. So I'll go from and it's probably best that you do that. That's why Dobbs is so he's so disciplined and he literally is so profitable because look at the market he's trading. You learn one market and it's very transparent as Asia and London. You'll be with this setup, you're 100% profitable, like really profitable. And then maybe if you want to trade New York, you go into minis. Now I trade New York all the time because I've been trading New York for a long time. But I know the little gimmicks they play, and I say a lot, and I say a lot of what it's doing. because I know New York likes to go sweep every 4-hour candle. It's a scenario they did on Friday. It's a scenario they did Thursday, Friday, and today. They try to sweep every candle, and they leave these gaps on purpose, and that's the reason that they do it. But the fact that out of all the days that they left the gaps, today was the day that they didn't hit the gap to the top side. It's kind of got me interested in thinking that that means that there's too many people going long, and they might start selling it down on them, thinking that everybody's buying this halfback on the daily because it's too obvious, and they'll go the other direction. And the weekly's kind of showing it because we started off as a red week. We could literally just trickle down into that low where London's at. And like I said, like you look at the weekly, it kept going down on weeklies, but the last time we went and swept the low on a weekly, it just went right back up. So that scenario is possible that could happen this week. But like I said, if you set up correctly, you'll see it. We're also bouncing off like a monthly halfback and highs, which is something for the upper tiers and want to like kill the market. And that's the reason why we couldn't get below that price. So everything at that price where it was at the lows kind of worked in his favor, but we still have that era of a more of a downplay. That's why we weren't 100% saying that, oh, this is the long here. Absolutely not. We weren't saying that this was the long. So until it displays as a long, for like a long move or a range move where we get our 67 or 80 points to the high side, we're still thinking that we got to go back to London's close. That London's close and open is at the same price down there from before the Fed report. All right, now is there anything else that we got to cover?
I think that's pretty much it. See if anybody's got any questions.
Is there any questions, any setup questions, anywhere that, actually, let's go back and set up for you guys. I really ain't, like say that we're still in this range and we did hit the lows, right? This is the problem that we have with this as well. So if you take the high of this, right? This is what we saw into the close that we were like, I don't get why they aren't just letting this go. I don't know if it's something with the options. It's more likely the options issue. That I kept saying, wait, we swept the low side, but we can't get past halfback. We can't get past the halfback. Like, what is going on? Like, we can't get past, and it's just a wall. Like, once you trade up there, it's a wall. And we hit the low side. Halfback hasn't broke. If we break halfback, I mean, we're going up here, like we said that the play is 24.55. 24.55 until direction changes. So let's set up and keep a small range of what happened today, and let's see how it correlates with this overall trend that we have. Because we are going to have an update, even in this little tight range. We are going to have an update. Doesn't necessarily mean we're going to lose this halfback overnight. Well, we're going to lose this halfback as the market opens at 6. It could be that we go back up here and fill the gap. So let's set up. Let's take this setup and 11. So we're going to take 11. And that low right there. What is that? 1500. And you know, to close the end, were on the phone, and we felt that we were going to fail this low and continue down. And look, they put it right back into the, and then, but look how
right back to halfback.
Yeah, and then look how it looks. So you know, even though we're saying it, look how it correlates. You know, so but the move down isn't much that we expect. It isn't really much. So it's kind of scary to say that, you know, that all these people are stacking up on shorts on this, right? Because it is down, you know, we're looking for a downward move, but not that much. And then all these people are long, like they're trapping a whole bunch of longs while we're still moving down. Those people will not cover. What happens is that the shorts will get too heavy And then you got all these buyers up here. And then if those buyers start recommitting or buying more into this drop down there, which is literally not that far away, if they recommit down there, this thing could shoot up like a rocket. And we've seen that at the lows that they literally shoot it up like a rocket. So look, and
Pretty
then
good.
we could just be trading downward. We could literally just be trading downward very slow because the range is so tight. And then what's gonna end up happening is that, okay, so we'll probably get, if we do trend downward, what they'll probably do, and they love doing this at the whole number, they'll drop it heavy down here like a big candle. And those big candles are actually, it's a liquidation hunt. So what happens when they hunt for that liquidation down here, right?
And
you got London,
misdirection.
you got London weighing down here for everybody, right? That creates that move up that we had a couple weeks ago, where they did the same thing. They literally came down, hit London's open. I said, oh, this is a buy because look what they're doing. They're picking up London, and they picked up London's close because there was a gap down there, and it literally just shot up to the highs, and will literally just, it could literally just do one of those moves that's just like, you're not going to be able to catch it all, but you're going to be able to catch them at the highs, and it's just going to keep on going. And in that case, you're going to have to watch these levels. And like I said, when price trades in that level, move that box to that level. Know where your high and half back at is at. You don't want to trade at the highs, but as we break on the higher, and that's why we say to look at the higher time frames. You hear me all the time. I need a break and a close above that price. So as a longer time frame breaks above there and closes above there, then you're looking for a continuation. But if it doesn't break and you're on a smaller time frame, that's just a wick. So, you know, the break on a bigger time frame will be confirmation that we're heading in that direction. And lately, they have been breaking them on longer time frames, and then they bring them back up. So it's like all these. But if you stick with time and what we teach, you'll see that, hey, we're near the lows. That's probably not so. No, not right now. If we're near the lows and it's the same setup, don't look for continuation until we break the lows, because all this sell-off right here was literally a whole bunch of 4 hours just sell, sell, sell. Everybody sold, and coming into New York, they didn't sell it. So realistically, here they hit the same price and it came back up, but it's literally the London close range kept doing that play. But the fact that we couldn't get above this halfback right here, it's kind of telling you something. Is that play done? I don't know. We get above this halfback maybe, but we're below London's halfback right now. So play for where it is. That about it, Dobbs?
Yeah, I think that's pretty much it.
Yeah, I got a question for you guys if you don't mind.
Go ahead.
So on your 4083 on your daily, can you show that on the daily?
Who's talking?
That's Angstrom.
Okay.
On the daily,
Yeah.
this one right here. So this candle right here was a huge candle that they created.
Right.
And it was into August. When we held the lows all the way down here, we created like a new low. I think this was the low of the year right here. So this is the low that I think will break in October. October, I think we take out this low. Well, right now, I think we're doing the head and shoulders. This is going to be your first shoulder right here. There's going to be a head up here somewhere. And
I see. So you anchored that off the large candle and the recent high. Okay.
yeah, and the reason that candle stands out, if you look at all the year, look at the whole year, look at this candle.
Yep.
That's when we broke this trend. Like if you go literally on a weekly, you could. So the weekly actually helps out a lot. If you go on a weekly, and we start closing red like this, look at all the weeks we get low red. And we had days that, I mean, it was London close range paid you a lot. Like this is a ridiculous amount. Like, and these arrows too, it was just outrageous selling. And right here, we're not doing that at all. We're literally not doing that at all. We're looking to break these highs actually. or take out these highs.
Okay, thank you.
But I use the daily to see where we stand. I think I was calling last week. We were calling out 41.91. When we hit there, I was like, "That's a 200% move." This is from this low, from this half back up here is 8.5%. And as you see it, this is only like 1 week that we were red, and it's literally, I mean, we pulled back 30 points here. You know what I mean? So 30 points, and we came up here. This is 8.5%, and no pullback. It's gonna pull back some. At least right now, we're like at not even. It's been very slow. So let's take from there to here, which is kind of what we expect, and that's a 2.16. Right now, we're not even over 2% pullback right now. We're at 1.84. If we get like a 2% pullback, I mean, say we took this last move up, right? Let me take that move. That's what they're looking at right there, right? Let's take the bodies of these things. And everything's like kind of key on that halfback right there. But the fact that we just did a huge move from like, not this, because, you know, and we're in an area that's kind of like a sell area. And we did this move from here over here, which is this candle right here. This is 100% of this right here. This candle is literally from here to here is 100%. From here to here is another 150%. So it's a lot not to pull back here and then make the move up. Can we continue to go up? Yeah, of course it could. But that's just the overall picture of what we're seeing. And it really just relies on the weekly. This weekly is going to be very important. For the fact, I think we will have a pullback now that we gapped underneath that high price right there. And saying that I think this is the 6th, and then we ended on the 30th. I think we get a pullback, and then we get a move back up. I don't know how. I think we just sweep this low, which is really where London's closed at, and I think that's just the justification for that pullback to pick them up, and then we get a move to make that head and shoulders type setup, and we can literally just shoot the highs.
Yeah, because basically what they did, they took out the structure, right? They blew through it. So we expect them to pull back, retest.
Yeah, maybe angle.
Retest and hold, but that's what's going to show us. So they either hold and go, or they fell on the retest.
Yeah, and the range is going to help us do that. That's the biggest part. Like if you set up, and we constantly say set up, set up, set up, set up, set up, set up. So we move to the setups. We have it here, where it's possible that we still have this move down. And remember, like when we say like, oh, we're below London's closed range, we flip to the other side. We're going to the top side. Forget it. Like we flip above here, then we start putting the boxes on the top side. Like when I lay these boxes down, this is where price is supposed to be at. I'm not concentrating on the boxes I do. I'm concentrating where price is at the time that is trading. So say that we get a close here at 30-minute above here, and then it's starting to move up. Yeah, I'm going for 41.36. You hear me call numbers all the time. Like as soon as I see something that, whoa, we just closed above something, I'm going for the higher price. I'm going up here, you know, and doing my levels. And at time, that's the biggest thing.
Right.
Time.
And you got to move your block, because now you got to move it to the top side.
Yeah, so now you're moving it to the top side, because that's going to be a halfback if we get above it. So it'll be like that, quick. Boom. Then what we're looking for, we're looking for that gap. You know, we get above
buy low, sell high.
Yeah, we get above that gap, we're gonna go
sell high.
So even if you guys do boxes, what we tell you to do boxes for is to set up for the play that is occurring. If you set up last night, when did we fail this? Look, we didn't fail until midnight. We start failing it. So This isn't the setup for yesterday. This is still from the boxes from prior. But I think the setup had us selling at 34. So once we went underneath 34 right here, and we couldn't get above, if you were like, I'll tell you this, if you have some trust in it, you could take a sell and have your stop right above 34. And that's how that works. Like 34, and let's go down to 105, 105, 104. I think it was kind of almost in the same area as over here, the low of that box. If you just did that, that's a huge play. You ain't even got to worry about all that. You can take a mini and stuff and do that.
Yeah, I think I had that 41, 41, 11, 25, I think was the actual.
Yeah. But we had 40, 45, 4105 and 40, 4112 from that price we had from Thursday from this play up here. And it was because we said once we feel that we knew that London being down here was a problem. We also knew that once they gapped up on this day, we were going to go see a gap. They just did not want to give it up on these days. It was too many chasers or whatever is going on. These reports came out. And like we say, wait for after the report. If you take away the report this day, it's the same play. You take away the report that happened at 10 o'clock. I think somebody said, oh, there was a report at 10 and I missed it. We're only human. If you looked at the chart, you see it. You're like, all right, so let me wait. You wait for London's close, they sold it down. You wait for 1300, 1300 sold it whole way down. Like time is the only thing that held it up. And that's why I said, oh, I knew this thing was going to gap down because it was still on the trend downward. And it wanted to get to that gap. And I was like, well, we got two things. We got a gap to the top side. We're going to move up to the box and possibly sell off from the box. But we also have what? The daily and the 4 hour up here that we literally wicked that. And we literally wicked that right here. Take that high. And then we're opening underneath it. So let's take the scenario. We wicked at it. So let's say that's can't get above the high. Where are we going? Halfback. Did New York try to hold it there? Yeah, they try to hold it there. And this is what we say about the 5 a.m. candles. Like right here is the 5 a.m. what does New York and the 5 a.m. candle try to do? They try to sweep all these highs. And that's why I say, oh, we're going up here, 41.33. It did come down more, but it was because of the rains. And then they brought it back up. Not really the range at that. It was actually, this is the daily halfback and this is the 4 hour halfback that it hit. So it had two scenarios down there. That's why we had two prices that we wanted to see kind of go down there. It wasn't going down there into 5 a.m. It got so close that, you know, got very close. But when it went down, it was literally a buy again and to take it up to sweep this high. If you bought low, like, you know, buy low, sell high right there. But the fact that we didn't get above those highs and we were almost like about to break that halfback all day, it could possibly occur. And if not, guess where we're going? The hell halfback, where are we going? 42.69. And then it'll have a decision maker, their gap up there. Now it looks like that on a chart. It looks perfectly like that. Asia go open, gap down again, and if we're below halfback, where are we going? We're going right to the lows. So it'll be a move down in Asia into London, and then when London opens, if London's at their price, and we're at 5 a.m. and the range and everything sets up perfectly, you better believe that London and New York are going to take this all the way back up. Because they're all going to have the same price down there, and they have the same price right now on the way down. So, but we break the market down into scenarios, not into what could happen. But we'll see how that works out into the end of the week. It could literally go up here, fail, and then do the same thing as today. It's very annoying how it was trading today. It was bad on Friday, but it was worse today. Until if you just played until 5 a.m. And there were some things right there at 41.09 that kept it up. Some important things. There was a weekly high and a halfback on a monthly. So yeah, there was reason for it to stay up there, but it was it traded very annoying to the point that you were just like this. You know, sometimes you just got to be like, you know what? I'll wait for 5 a.m. I got you at 5. You heard me last night saying, oh, this gap has got me. You know, I took a little short at 2100 and got the low side of it, and I was like, okay, I'll see you at 5 a.m. There was a play. There's a play for whatever time you're gonna trade it, and there's plays throughout the day. I mean, how I've traded today, less risk. You could have been profitable.
I mean, New York's tough. I mean, bottom line, New York's tough. You know, pre-market from 6 a.m. Well, my time, CST, 6 a.m. into New York Open. So for me, that's the play. I'm to the point now I don't even like trading New York. The next play for me is London close.
Yeah, what I tend to do is I'll be with ES until New York, and then I'll jump into minis. And I tell people, well, trade minis on it. You know, if we're moving, if we're not moving how we are right now, when we're flowing, you could kind of see it, and you'd be like, okay, we're breaking out. We didn't break out. We didn't do anything today. We literally went back and forth at every range. The high side, we hit the low side, we hit the high side, we hit the low side. We never made a decision of where it was headed. But if you traded with minis, you had a little opportunity to just scalp it a little bit. And then when you know, you gotta learn that scenario that, oh, I'm gonna scalp this thing right before what it's doing. And then you have the scenario where, you know, it's flowing right, and you could literally kill it with minis because it'll just keep going. But you gotta take the ranges, and then once you take the ranges, you're good. You know, you take the ranges. But we held here. We're going up there. And you literally learn how they actually add to their plays and how they exit their plays, and it starts to feel like very common and normal. And then you start feeling it when it's not normal, and that's the biggest thing. That when you start feeling when it's not normal, that's when you like ease off the brakes and you're like, you know what? I'm not doing 6 or 7 minis. I'm gonna do 2 or 3, and I'm gonna take my 10 points and be happy, and whatever. And it doesn't work out all the time, but at least it isn't a big loss. If you take ES, you take 3 contracts, you're hurting if it goes bad. But the setup is there.
The only thing that I really want to stress is, you know, y'all hear me say, you're going to hear me say it because I'm going to continue to say it. We trade price. And that's the problem I feel. It's hard to get out of the habit that looking for a price. That is not what we're looking for. I don't care what the price is. I could care less. We trade time first. You're looking at time. And when I ask the question at clock, that's what I'm talking about, at a specific time clock, you have 3 choices. Where's price? Is price high, low, or halfback? It can be of that candle. It could be of the range that we're in, but you're looking at where is price. 2 of them are wrong. So if you can eliminate the 2 that are wrong, you just increase the probability of being 100%. I know I tick a lot of people off when I say, if you read the chart correctly, you can be 100%. Well, guess what? You can. The system that I have come up with, you can be 100% if you eliminate the 2.
As usually eliminating your demons too.
And you got it right. And you eliminate your demons, and the range blocks kind of help you do that.
The chart doesn't care what your opinion is. What I said right now that, oh yeah, we can do this, do that. When it comes to trading and that thing says buy.
But I'm going to tell you what, I trust this range. Yeah. I trust this range block. I know I'm going to sell high. I'm going to buy the low. Where's my target? If I'm buying low, halfback's my first target. If halfback holds, this is my second target. The rest don't matter. It can go without me. I could care less. Mm-hmm. It's the same thing on the other side. We sell high.
You're not chasing that price up there. Once the play is done, that's it. What do I constantly say every day? Next play is in London's close, and then you wait for it to develop.
So, you gotta wait on clock.
Yeah, because today, if you waited on London's close, you saw that London just sold at the high.
So they sold the high. You know, your target's halfback. It's the same scenario. Your next target is the low, and that's it. It can go without you.
Yeah,
We
you gotta
take what the market gives us because that is the probability of the play. Why? Because there could be one time that it does do this. If you don't take target or vice versa, there's going to be a time where if you're selling high and it comes to halfback and then it hits here, there's a good chance it turns and it don't roll over.
Yeah, it'll happen sometimes.
It can bounce hard. It can do that. That's why I preach you got to take your targets. You got to be disciplined of taking target. Now, can you scale?
Yeah.
I would recommend scaling.
Yeah.
You know, I would recommend scaling because that way, if you take 3 micros, 3 MESs, if you're selling high, I'm taking 2 off here at halfback. I'm letting 1 run for the low.
And that's going to be a scratch play, like, because if you're right, not if you're right, but if the range keeps on going, you're gonna be like, well, I have nothing to lose. It's like getting the rest of this, and then you'll see that it'll add up. Because where you want to move, like I put on in the chat the other day, is that you want to go from 1 to 2 to 3 to 4 to 5, 6, 7.
Right.
They allow these prop firms allow you to trade up to like 40 or if you have.
But I don't want you guys to think, well, okay, like just play this right here as scenario. This could have just dropped hard right here. Well, so what if it did? This is target. The rest don't matter. That's why I keep telling y'all it don't matter because why? Because it's not going to do this move every time.
Nah.
We're playing probability. So we're taking halfback target. We're taking the low target. That's it. Take what the market gives. It can be, remember, we're only looking for 5 to 10 points on any given play. 5 to 10 points.
Yeah, like you guys heard me going long right here. Like I went long on this play right here. So I was looking at this, what I use, this candle right here. This is the 4-hour candle.
But what you hope is you get a good range block, like 6 a.m. range block. You get a good 6 a.m. range block, you're gonna catch a 20, 30 point run before New York opens.
So there was a big issue with this play right here. That we could not get above this halfback right here, and I thought we could, and it said go here once it held here. We did 1300 candle right here, held here, swept the lows. Once we got above this high right here, I was going in this candle. I took 26 and then 30, 32. Why? Because you got a low that we ain't failing, right? And then we were holding this halfback. We're holding this halfback, and we start trading above here. And candle opens up here. I know we're going to go sweep these highs, not just halfback, but I took this here, and then that was it. I thought possibly we go up here, but remember up here is the high of right here. Couldn't get past that. Could not get past that. We wicked and then hit target, and I was like, okay. But then when I saw it, I was like, oh, this thing is rolling over again. I said, now we're gonna go sweep the bottom side of this because London opened and they just sold it off. Like literally, look, this is halfback of London's close right here. So the possibility of coming down and taking out this low was going to happen. It didn't happen, but this is more indication when you start seeing things like this, like, hey, we couldn't get above this high, right? We couldn't get above this high, right? Now we're filling this halfback, and then the market kind of closes and does this. Yeah, we already swept this high. So we haven't swept down here at all. So possibility of this opening and coming down this way, especially since we're below London's halfback right here, London's close halfback, it's possible that we come down here. But the market could be tricky and come all the way up and hit that daily high and then roll over into London. London could sell it all the way up there, be mad at New York now, letting them get that price. And you can see us come down and New York might sell it. New York might sell it and then have a lot of people selling it. And then at the end of the day, they buy right back up. Scenarios are there, but that's what the ranges keep you in play with. That's why yesterday, where we opened below London's. When we open, where's London's close? Up here. Look where we opened.
Yeah, I said we were too far away. Plus, we had the 10-point gap rule. 10 points or more, you go with gap. They did not close the gap by clock.
Close the gap. So
a lot of
if we were to close the gap, we would have gone half that.
Yep.
We didn't do any of that scenario.
They could have took out the high too by London.
But the fact that we couldn't get above this gap is already key, saying that, hey, we're below the daily and the hourly. We're gonna go back to halfback of it. We hit both halfbacks right here. Now, can we go back up? Yes, we could. This, like I said, whatever range is set, that's probably what we'll do. And maybe we'll pull up here a couple. We'll do 2 boxes because the range is really tight. Maybe we'll do 2 boxes and we'll sweep up here, and maybe we'll go from 24 to 55, right? And then maybe going into Asia, we start selling downward again. And then once we get above that high, we know that, hey, we just remember this isn't really a sweep right here. That's just, we wicked at the price. And that's what I think I said. I said, I wish it went higher because I wish we did a sweep. You know, we swept into it and that's good. I hate when they gap and it does this scenario because I was expecting the sweep, you know, hit that price and then roll over. So all day long, I was like, that gap up there is gonna kill me. I swear, even in the night, I was like, that gap. And I just hope it goes and shoots up to the highs, but then we're done with the gap. We hit the gap down here and we come up here and start trading up here, good. Because that means that we're just gonna break out. But you know, they buy time in this for a reason. And they pull back for a reason. This is them taking slow profit on people trying to.
Oh, today was slow rolling. I mean, they slowed it down.
Chasers are taking profit. Chasers are taking profit. Right here, it could go either way. And it could be like, all right, let's get more chasers, and then it comes up here, and then it rolls over. So it's very important to keep an eye where we're at with price, with time. And we could just come up here and dangle here for the longest, and then fall down. Because once we fall down above this high, we're going back to halfback. We get to this halfback, we're probably going to eat this halfback like nothing. It's probably going to go like butter. And the drop is not saying like, oh yeah, we're going to buy down here, because they could literally keep selling it down. You know, they could keep selling it down and then pop it up very aggressive once it gets oversold, or you know, to a point that they're like, oh, we could go all the way down here and stuff, sweep hard, and then come back up. So it's not necessarily a buy because they want to get more people short in it so they can send it all the way to the highs again. A proper pullback is really what they need right now from a 4.5. So say that they did a 4% pullback, you know, of a move from there. Let's take the highs, the most aggravated sense of this, right? They did 4.5. We could go back 4% back here. We can go 40-20, 40-30. And they could ramp it right back up once they get the pullback, it doesn't matter. They could ramp it up the same day. The more the merrier for them.
Yep.
And it falls in line with the weekly. So if they came down here where we think is going to come to this area, this is a 3.6, 3.4. If we get down here at 4.4, there's going to be a lot of buyers down here once you sweep this low. What we want to watch is if they buy it up, it goes to London's close. And then right here, London opens the next day and they do that type of scenario. Because when they drop it down, it could possibly leave a whole bunch of like price. It could leave gaps. It could leave a lot of price that needs to be filled in, and they could do it quickly. And that's how they want to do it. Because the faster they do it, the less people participate. And especially if they could do it over Asia market, which Asia market has been selling more than any other market. So if Asia open here, look at the sell off. Like this is 37, 39, all the way down to this 30 points. We haven't seen that in a while. This right here is Asia, right? Let's see, Asia into London. They sold it some. This was going into that report, so 76 is 20 points, and this is 30 points. So it's kind of getting more accelerated as it goes down. So can we gap again and then do the same scenario? Yeah, we could gap again. We could continue to do that, or we could shoot the high. But say that we go up here tomorrow, say that we don't sell, and then London comes up here and they start selling it down, and then New York buys it, and we can't get above this high, and we come back into Asia with this low, we could literally just come down. So, and like I said, we could literally do one easily. So we'll see. The key for this is literally this high and this halfback that we're going to play into the end of the week. And I expect a pullback because if you saw the weekly chart that we just posted, we just showed this weekly chart, right? This is the weekly chart. This candle just started. So yeah, we could literally have a big candle all the way down. We don't know where this candle's going to stop. It could switch, take out this low, whatever. We could pop up a little bit and then sell off. But realistically, like this candle pops up and then comes down. So we could get a little pop up, sweep that high, and then pop down. But we're going to keep an eye on that high price right there. Because as it looks, we're close below the week. We had a gap. Can we continue moving down? Yeah, we could. Yeah, we could. Look at this one. Yeah, we could. So it's a scenario to keep in mind that even though trend is up, we still have to pull back. That's about it, Dobbs. That's all I got for you.
Yeah.
Any other questions? I mean, we could answer some questions that they have on anything, any setup, any time.
Anybody else got any questions? I know we had a few leave. Still got a few more in here. But the setup is going to keep you on the right side. So
yes, and time,
setup, Stangum line.
And like I tell people, this Stangum line, you could put another moving average on this that's tight on a tighter time frame. Once you get to those times, some people say, "Oh, I'm not going to buy because it's underneath Stangum line," but with time and where we're at, a pullback to it is decent right here. We went sweep low 5 a.m. right here, 6 a.m. we're above, back again. And I tell you, keep an eye on the 4 hours and all that stuff because that's very important. That's why I put the fibs on the thing so you can see the highs of every 4 hours. And London's open is kind of important too, because they're the ones that said, like, if we're going to continue to sell off, you're going to see that they'll continue to play. Same thing as up here. When London closes up here, if we're going to continue above the New York highs, London will let you know that this is still a buy. If not, then we're going right back to the lows, which is literally what we did. They weren't buying it. London didn't buy it. It was no continuation. So you got to look at London as half the day. Like perfect example is if this is New York buying, it's 5 a.m., right? We should be up here where London's closed today, right? Mm-hmm. And then the rest of New York, we should have something like this. Mm-hmm. And then London's close is going to be a halfback. And that's the problem with this candle where we're at right here. That London's close isn't here. London's close is at the low. So that's an area that we know is going to return back to because it's supposed to return it. London's market is supposed to always be in the middle. When London's market is not in the middle, it's usually like we need to get back to London's market. And then this is literally what they kind of see. Here's another thing that London closed up here, right? And they sold here. We swept lows and they came back up to London. This is literally half back of London. So London's play did half back, failed, and then came down. Well, again, this is 2 days worth. London's close should be half of where price is at. Why is London's close at the high? Are they buying or selling? If we're below 50% of the move and we're breaking the lows, that means price is still trending downward because London's close should be in the middle of the day and New York should be up here. New York should be up here. And if anything, we pull back to this price. But we're not doing that. So if we're not pulling back to that price, that means there's something wrong with there's like a divergence in this where it needs to get fixed. And the fix is to go all the way down to the lows. Now, take for granted, we closed up here and we closed over here. I mean, we opened over here. And then look at where our close is at. So that's kind of open, close. Can they run it back up here? Possibly. And that'll be the play if we start trending upward. We're going to London's open. I mean, close up here. which is possible that we come up here and hit this area. But look where that area is at too. So yeah, if we start ramping up, we better believe that we could possibly go and break this right here. And then have that scenario where we're gonna break out really, really aggressive. But that could be an underlying condition in the market where there's something wrong with from what it's doing, because we're leaving London at the lows. And what's happening right here is that they're positioning themselves to squeeze very hard off of this aspect. So literally, a scenario that they could possibly do is literally just start breaking out very aggressive. They try here, they get up here, it could literally ramp up very easy, very hard. And it's something that they'll catch everybody off guard.
Yep, they could drop it, do misdirection, and come right, hit that 96, and boom, right back up.
Yeah, so it's very, it varies. So what it could do.
But we don't care because we have our ranges. And we follow the block.
Yeah. And if the thing is going up, we're going to go with it. As far as entries, it's going to be at the lows where it tells us entry. Like we're not going to be entering at the high of London close. If that thing takes off and keeps going, it's gone. You can't do nothing about it. Like even on the Fed meeting, when that thing was at the highs, they probably have maybe one play up there that gave you a nice push to the highs. But if you saw it, as soon as we hit the range, it stopped dead in its track into London's closed off.
Yep.
And then that was another indication that when London's price closed off, right here, I think this was 1500. We closed off and then pulled back. This right here was odd that they did that, because everybody already knew that we probably got to come back here. And all they did was just ramp it up, and I was like, oh, that doesn't look good. But going into Asia, we're above the range, and if we're above the range and we're holding this high, look at it move up. And they moved it up. So we go with what it's doing. This could literally happen easily. We could have this easy move. This is 41.43. This is a 80-point move, more than an 80-point move up. Could easily have that up here. Another 80 points to put us above here, and we're literally breaking out. But we're gonna buy at the lows of London close range and not the highs, pullbacks to halfback, or consolidating at the highs, indicating that we're gonna break out. And it usually happens in London's close or the continuation to 1300. But once you get to 3 o'clock, you better believe that it's going to produce a big candle to the downside or upside, but you don't know what's going to happen because people got to take profit and people got to close out their positions at a certain time. So during that time, it could go either way. And that's why we use that period to set up for London's close range, because that's the true period where price already has traded. And then we have to, see where there isn't these closeouts and prices that already that are just literally positions being closed out, or people just manipulating the market at that time. Anyway, that's about it. Covered just about everything, right?
Yeah, I think we have. Anybody else got any questions? I think Adrian asked about what's the Stangam line. So that's the 30 EMA.
Yeah.
Same thing as the 30 EMA. We use the number 3 because we use threes.
Three markets. Usually it's 3 markets. Each market will produce about 20 points on a depending on how price is, how high price is. Remember, the price doesn't matter, but it does matter in a certain sense. That the higher the price of the market is, the more that value is going to be higher. When we were at a lower price, like under 4,000, it was less than 20 points. I think it was around 15 points each market. It's just a range that it develops as price increases. When we were at 4,800, it was nearly 80 points, right, Dobbs? Each market was producing about 20 a little bit more than 20 points.
Yeah, it was about 27, 28 points.
Yeah. So each market was producing 27 points. There was a lot more plays when we were at 4,800, 47, 46. For anything over 4,500, there was a lot of plays during the day. You could literally get about 14 plays. As price came down, you have less plays because you have less. Oh, they're taking it. Well, they're taking a half back right now. Anyway, but that's the scenario. Is like we do all that and put it together. So, and it correlates perfectly with the London close range. So you'll see it that you're like, okay, the range is hitting, and then you see that there's no other time will not permit it if price does not move as it should. And you start seeing that how much we moved and how much it should move, and you'll see that the play is done. You already took the play. You got 10 points here, 15 there. It literally adds up to the whole range when you're taking those plays. So if price is coming down, right, and we're at 45 points, and we still have 15 points to go, and we're still in a downward move, you're probably gonna believe that you're gonna get those 15 points. But it doesn't mean that you have to take those 15 points. Is that you have to get good enough where you're trading and you have enough contracts in there where you can start getting out of positions as it goes down. A lot of people will hold on to a big position, a lot of contracts to try to get to targets. That is not true. You have to start exiting your position as price goes down. Because you never know when news will come out or something will happen. Everything affects the market in different ways, and to take profit as you're winning is what you want to get there. It's taking the play as it goes, where you should, and at the time that it's occurring. And that keeps you in line. The ranges keep you in line. The times will keep you in line, and starting to generate that kind of discipline and getting rid of bad demons that you have will make you profitable. Everybody had demons, so everybody still has. Some people still have demons. But once you start controlling those demons, you'll see, well, I lost from that play. Let me recover it with another good play, but let me wait for the play to come out. Not let me force the play. Oh, it's going the opposite direction. No, the play already left without you. What are you doing? You're chasing the play that's happening. Wait for the next play. Like I always say, New York's play is done. Let's wait for London's close. That's it. 5 a.m. play is done. Let's wait for 9 a.m. play. 2100 play is done. Let's wait for midnight. It's all there. All the plays are there. It's just you. And if you become disciplined, you just become a great trader. And that's what we're trying to develop, like great traders out here. Dobbs is very disciplined. Dobbs is super disciplined. His market is awesome. Like I'll stay up some days, but I can't pass 9 o'clock. I'm up at 3. So I can't do 9.
Not up far behind you.
Yeah, but you only work during the weekend. So. when I ain't gotta work, when I don't have to work anymore, I'll be up with you. I like that market. I like Asia's market and London's market. That time frame from midnight to 5 a.m.
They're killer markets. Yeah.
Prime time. Like whoever's on the West Coast, I mean, that's literally like payday right there. And you could go, don't listen to me, I tell everybody, go on the charts, set up the way we set up and look at those errors, those times. The only times that those markets are bad is during reports. You write down all the reports, and we share all the time the reports come out. I might have missed one last week, but if you look at when the reports come out and stay away from them or just wait until reports are done, you'd be like, man, this is it right here. Like, this is the best markets of trade. No heat, no nothing, like literally it just works very easily, like it's very transparent, like everything that it does is transparent compared to New York where you're like, why are you guys holding this up? Like, just let it go. But
we know because New York has options. So,
and once they started putting the daily options, it got even worse.
Yes. Same day expirations now, when they kick that in, it's a lot of back and forth anymore. A lot of back and forth.
They hit like I think the highest amount of options that were traded or rotated. So you got to think that these guys are getting money from a ton of directions. But if you look at the ranges, our ranges kept you in the plays. It kept you in the direction of the market. Through all the reports and all the BS, if you take all that stuff away, we trended down to where we said it was going. In fact, we've been doing this for a month right now, and it's been literally doing the same thing. But we've been doing this for a very long time, and it's done the same thing. So it's not that the market changes, it's that they disguise with reports and all this other stuff how the market is going to move. And that's why the range keeps you in place, keeps you in the place for what it's doing at the time that it's doing.
All right. Anybody else got anything? If not, we're going to wrap it up, and then I'll try to get the video uploaded. Market's open.
Market is open.
Adrian, y'all good? Jax, y'all good?
Video will be up so you guys can refer back to some stuff. But realistically, almost everything we share is going to be on the charts that we post up. If there's any questions, just ask us. There's a ton of people that ask us questions, they DM us, and we get back to them. Everybody gets a response. There's no way it doesn't get a response.
Nope.
Everybody will get a response. They'll get a one-on-one. We're literally like doing a lot for everybody that's coming in right now. More than we could. Once the crowds get big, it's going to be less attention. But that's why we share so much with you guys, so you guys could actually, have that edge on everybody when it comes in. And some people are getting it. Some people are responding. Some people are putting P&Ls in the chat. Like today, Wonder Woman did it. Like so and she said it was by accident, but she played that 5 a.m. play. I bet you, I guarantee she did.
I know she killed it. She's got that play down pre-market.
Yeah, that's her. Red, like literally that 5 a.m. play is it. And if anyone needs a setup like that, we can do it for you. We'll show you exactly what they're doing and how they're doing it.
Yeah, guys. I mean, they'll have it in the video. Anybody watches it. I mean, if there's a certain time that you can only trade, let us know so we can look at the chart. We can come up with a setup for you.
You hear me say I don't trade every market. I stopped doing that. But I've been up with Dobbs late, and I've woken up at 3 in the morning and done all this, and we've done all the research and all the stuff to make sure this works. So it's been years of this that we've done this. We just put together something that works better on a higher time frame. A lot of people don't like the 15-minute or 30-minute, but it's solid.
Yeah, I was explaining to Michael today. There was 3 things that I tried to do when I come up with this. Number one, I wanted to keep it simple, and I think we got that. The second thing was being accurate. And these time frames and the range blocks that I use, that I've come up with, it took time for me to develop which ranges work the best. And these, what we have right here is the most accurate. And then number 3 is consistency. Are we able to do it day after day, night after night, clock after clock? And guess what? It passes all 3 criteria. It's simple, it's accurate, it's consistent. So what does that tell me? That tells me that the market's not random like the books and everybody out there that teaches. It tells us that the market is random. It's hogwash.
What is it that they say? They said, "Oh, we're gonna go hunt liquidation over here and all that."
It's hogwash. It's hogwash. Because think about it. If the market was random, then how are we able to do the same thing every day, every night, same time, same place? The market's not random.
Yeah, and if you miss a play, like just wait. You're gonna get another play. I guarantee you. But I always say, just wait. That's my biggest thing. I say patience. You got to fight that demon of patience, because you're going to take a very good play or you're going to take a bad play. But I'll tell you, 100% of the time, you take that bad play that you didn't wait. And then the play actually shows up, and then you're like, why do I have this price? And that's the biggest thing. That you're like, dang, it was going here. Well, why do I have this price? Because you didn't wait. And just working on your entries is the biggest thing. Like
right.
A lot of people, entries is key. And we literally, there's a video on entries, literally how to get into plays, where we're headed, targets, I think somebody did it though. Somebody was putting up their chart and they had targets, and I was like, "This is it right here." When you start seeing that kind of feedback, then you say, "Oh, okay, they're getting it. Oh, there's a target."
There is a lot to it. That's why I try not to give you guys too much, because I don't want you focusing on the right thing. Because right now you need to be focusing on setting up your chart correctly, being able to read how price moves out of those ranges, and you move your range blocks. You sell high, you buy low on those blocks. You wait for the pullback in the halfback, depending on direction. Is it a low high halfback, or is it a high low halfback? That's the direction that you're expecting the sweep, and then to target of area 51. It's very simple. London setup, all you have to do is use the first candle print. That's what I would recommend on London. Just wait for the first candle print, whether it be the 15-minute or the 30-minute. Same scenario. High of that candle, low of that candle, halfback of that candle. Below halfback, it's a sell. Above halfback, it's a long.
And if we go above the halfback, then we're going to the 151 on the top side, and then we'll work on getting to the 100% move.
Right, and more than likely that move will move on into 6 a.m. But you got to be out when you take plays at London. You got to be out at 6 a.m. because 6 a.m. is going to reverse on you. 6 a.m. is a reversal. Is a reversal clock. It's not a main clock. It's a reversal clock. So as you seen, John was explaining on the chart, every time for the last few days now, London's been a sell every time.
Yeah, London's
most of the time, London's a buy.
Yeah. Even their close has been a sell at the highs. They've literally been like, nah, we're selling it. Nope, we're selling it. I think this day is when they started right here, when they did this. They literally bought it up and then they sold it. The thing is that the next day they went up to the highs, and as soon as they opened, they started selling it.
They were at halfback. Yeah, there's that halfback. There's a reason for it.
Yeah, and there's a halfback of this area, so they sold it. And today,
high, low. This is halfback.
Yeah, and then today, look, the high on this.
Expect this right here. This is what we expect. So we expect the sweep. Then we expect the target of 151. Target. That's it. We don't expect anything else. That's it. That's the play.
Now we were prepared to take this lower, but realistically, with time and how they were doing it, wasn't happening. The fact that I think on this candle right here, and I think I texted out and say, oh, they're flipping it on this candle right here, and you could go on the 1 hour, and it looks crazy the way they did it. So if you go 1 hour, look at this candle. That is a doji with a lot of buyers. So this candle right here had me like, I think we're going higher. Possible. It went all the way to the London's close range bottom and wick like this. This is not a sell. And it could roll over because we were trading underneath it for a long time. We were trading underneath that doji for a long. We couldn't get above it. We just couldn't get above. Couldn't close above it at all. It's a lot of things we look at and we try keeping in play. But maybe now, we're hitting London's close range right now. Can we go up and hit 42, 41, 42? Yeah, definitely could. They didn't want to sell it. We swept the downside. Why not go sweep the high side? Held halfback. Why not go see highs?
Okay, and also, Adrian, the correct range, if you wanted to do a range block for London Open, that block is from midnight CST to 2 a.m. So that is the actual range block for London.
All right, Dobbs, I am done. I am beat. I worked this weekend, so.
All right.
I think we'll keep it like that. If there are any questions, like I said, you guys could DM us. If you need a setup specifically for your time frame, we'll show you how to do it, and entries as well. We'll work on that, and we'll show you, if you're on a lower time frame, we'll show you how the higher time frame relates to that lower time frame, and how possibly you get whipped out of a play that's actually a winning play. and how it doesn't matter really the time frame, it matters the range and time. Because sometimes those lower time frames are, if you're on a lower time frame, it's a higher risk with a smaller reward. So you got to think about that. So you're literally going with higher risk to get a smaller return, a smaller play on it, because you can't. Once in a while, you're gonna get a home run, but when it turns or when you're just doing a 50%, it's gonna roll up really nice. And if you don't exit at that 50% and it rolls over, then you're back where you started or losing. As if with longer time frames, once you're in that play and the play is solid, that you're like at the lows and it's going and the entry is there, you're gonna see that everybody starts to buy, and that's why price starts moving in an aggressive manner to a target, because it's literally like everybody's just waiting for it. And you start to see that, and then you start to realize that them smaller time frames don't have that. Or you can't see it. They do have it, but you can't see it when the buyers start coming in. And then if you could get to the buyers, that's where you start seeing on a smaller time frame, you won't see targets as much. You'll be like, oh, I'm getting out there and I'm getting out here, and then I'll let one ride. And that's what you want to do. So that way you have a good position as you get in it, or you accumulate a good position as it's going, and then you start exiting at targets and then letting one ride. As with a smaller time frame, you're literally going in with a larger position, and you're not getting the whole move, which is okay, but higher risk with a shorter distance for reward, kind of you get more wicked out of plays, or more
Shook
lost.
out.
You get shook out a lot more when you're actually right, because it'll take off, make a high, and then it's going to do a 15-minute pullback. Are you ready for that 15-minute pullback with the risk that you have is the problem. And then when you see the pullback, then you're already out of the position, and then you see the move up. We had somebody like that, I think, in the room that was constantly on a smaller time frame, and he kept on getting stopped out. But that's because the play was developing off of 5 a.m. and then it wasn't telling people on a higher time frame to enter the play. So when they entered, that's what took them out on a small time frame, because he was like, he had a tight stop or whatever. But then if you were just waiting for the pullback on a higher time frame and got in, he could have took the ride a lot more comfortable, instead of realizing that he was in a pullback. He was just getting stopped out when the play had just developed. That's about it, Dobbs. I ain't got nothing else. Unless they got something, they could DM us. Lots of videos.
All right, guys. Appreciate you showing up. That's the recap. And like John said, if you got any questions, just hit us up in the Discord. We'll be glad to answer your questions. So hope everybody has the rest of a good week, and keep your risk small. Trade small as you're learning, and go for the 5 to 10 points and go for targets. So
set up. We're still in the same range too. So we're still between that daily and halfback, daily high, halfback, 4 hours and 4 hour high. We're literally in the same place, and we were in the same range from last Thursday. So can we go up? Yes, we could. Can we go sweep that high? Yes, we can. Can we come back down? Yes. So it's tight range for tonight. So until Wednesday or Thursday, until we break this range, we're going to be very tight right now. That's about it, Dubs.
All right, guys. Appreciate it, and we'll see you on the next one.